So today I want to talk about how to make money trading so easy that it feels illegal. We're going to talk about the illusion of complexity, which is the reason why most traders fail before they even begin. The law of direction, which is the only technicals that really do matter when it comes to trading. The psychology lie, meaning how psychology sabotages you without you noticing. The belief prison, escaping the lies you tell yourself about trading. Because we do tell ourselves a lot of lies, and that's one of the reasons as to why we stay so unprofitable. Then I'm going to talk about the risk engine, which is why risk management is your real edge, the prop firm revolution, how the money in, money out changed trading forever, and at the end, obviously the cheat code, how to put it all together and make trading so easy that it feels illegal. Now, I want to get right into it, into the law of direction. So the illusion of complexity. Most traders sabotage themselves before they ever take a trade. They believe that trading has to be complicated, but the truth is you become a profitable trader when your process is simple and repeatable. Complexity is an illusion. Here's trading in one sentence: a mathematical profitable edge over a long enough period of time. And a lot of traders think that this is complex, but not really. So let's break it down a step further. A mathematical profitable edge, which simply means you need a profitable strategy over a long enough period of time. Traders start changing their edge after a couple of losses, not understanding that when you have a profitable strategy, you can't predict the next 5 trades, but you can predict the next 1,000. And that's why I have added this picture here that says the probability of X amount of consecutive losing trades within a 1,000 trade sequence. And this comes to show that even though you might have a 70% strike rate, over 1,000 trades, you are still 91% likely of taking 5 losing trades in a row. Or let's say you're 100% likely to take 4 losing trades in a row. And the reason why I love to use this chart is because a lot of traders, they start changing their strategy based on a couple of losses. Okay, what is it that I'm doing wrong? What can I change in my strategy to not have this losing streak? And guess what? Overall, you are always going to have the losing streak. Now, in terms of simplicity, I only focus on 3 things: market structure, daily bias, and order flow. And that's it. But why? Because as day traders, if you're a day trader, you don't make money knowing what the market will do in the next 6 months. You make money from what happens today. That's why we are a day trader. That means that internal structure on the daily and order flow on the daily is the one thing that matters. Daily, 4 hour, and let's even say 1 hour. That's where the profit is if you are a day trader, because a lot of traders, what they try to do is they try to forecast where the next 5 months are going to go. Where is NQ going to be in the next 5 months? Are we going to have a crash? Are we not going to have a crash? When you can, as a day trader, just trade what is right in front of you, and you are likely going to have very good results. Now, your one goal is to have a profitable edge and then give it enough time to play out in your favor. Because a lot of people, they have a couple of losing trades and they followed the process, so they did everything right. And they start banging their head against the wall because these were losers. But I don't want you to do that. This is not going to help you. Direction is the cheat code. Direction is what makes you money, not the entries. Precision is overrated. You can obsess over the perfect sniper entry, but if you're on the wrong side of direction, you will still lose money. While on the other hand, you can be early, late, and the trade's still playing out due to trading the right direction. And what I mean is that a lot of traders, what they try to do is they try to understand, okay, where's this low so I can get the sniper entry for the market to move up. Right? And then they take profits all the way up here. You are better off just letting the market show you what it wants to do, which is this market shift. And then you enter on the expansion, and all of a sudden you made as much money as someone that was trying to catch the low. But the person that was trying to catch the low, or that sniper entry, they take a loss, a loss, a loss, a loss. Then they took a 6R, meaning they made 2R. So you literally only need to make a couple of percentage gain to actually catch up with that person that had a sniper entry. And so I can't explain enough how much precision is overrated. This is something that I stand by a lot. You don't need precision. You need to understand where the market is heading. Because if you do, with a large enough stop, you will be able to have profitable trades. Now, the trading trifecta, my framework is pretty simple. Trading trifecta is something that I came up with myself, which is strike rate, trade frequency, and risk to reward. It's always going to be a balance between those three. And I just decide to obsess over direction. And yes, you will not have 1 to 50 risk to reward trades, because those usually come with either a very low trade frequency or a very, very, very low strike rate. And I like to focus on a high strike rate. Having a high strike rate is a cheat code to profitability. And why is that? It's because most trading mistakes happen after a couple of losing trades in a row. This is where people are like, oh, how can I do this? Okay, maybe I'm going to risk more so I can get out of drawdown. Maybe I have to change something to then be able to become profitable. If you had a large enough strike rate, you wouldn't be thinking about these things. If you didn't take a couple of losing trades in a row, you wouldn't be thinking that, right? So that's why I think that a high strike rate is important. And the way you get the high strike rate is by obsessing over direction. So going back to, because most trading mistakes happen after a couple of losing trades in a row. If you can reduce the probability of that happening, meaning a couple of losing trades in a row, you increase the probability of you becoming profitable. Because to me, I know that most trading mistakes happen after losing trades. It's very, very rarely over winning trades. Of course, you can make mistakes once you enter in 1, 2, 3 winning trades in a row. You're so happy, but usually the mistakes happen when you have losing trades, because that's when you start trusting yourself less. Now, the market's biggest traps. Almost every account blown comes down to ignoring the direction. Because by ignoring the direction, you get hit with two things. Overtrading during range-bound markets. You don't want to trade a market where the direction is 50-50, right? You want to trade the market when the direction is an 80-20. It's never going to be 100, of course. This is not to say that your trade will have an 80% chance that it will play out, but it's to emphasize that you should be trading when the market, the direction is very, very clean, instead of 50-50, which is what happens when the market is range bound. And I use these two as examples of one market where it's very, very clear where it's going. The market is showing overall a bullish trend. And yes, it has moves lower, but eventually those moves get reversed and the highs get targeted. While right here, this is on gold, and at the bottom, it's NQ. On gold, you can see that usually we just have a range-bound price action, and I've talked with a lot of gold traders recently, and most of them have seen a lot of periods of unprofitability right now, and that's because we are trading range-bound markets. You're trading a 50-50 direction instead of an 80-20 direction, right? Focus on when the market is very, very clean. And I'll show you exactly how I do that. So counter trend, most traders try to call the high or the low of the market. And this is why they lose. Oh, NQ is at all-time high. It has to move lower. Or NQ has moved down 5%. It can't move lower. A lot of trying to catch reversals is traders just trying to find a reason to trade when they don't have a setup. But the truth is, most trading is not trading. And I want to give this as an example because inside of Funded Trading Blueprint, which is my community where I focus a lot on direction, and that's my number one thing. We have daily market breakdowns. We have two of them, one for futures and one for FX. And we just have like an amazing community with over $900,000 in payouts and over $40 million in funding. So if you want to get funded this year, then I do recommend checking it out. There's going to be a link in the description. Now, I wanted to use this example because this is something that I personally traded, because every day I talk about the direction that I have in the market, and most of the time during this areas of green, this is when I was trading. And yes, the market was moving counter trend, and some people would be like, oh, how come you didn't short here? Well, I didn't short here because I understood that the direction that I want to take the market in is on the longs. So I always wait for the market to show me that the lower time frame and the higher time frame are aligned and both are pointing upwards, and that's when I decide to trade. And that's why over these last months, we've had amazing returns. So we have the market moving up, and then every time that it's starting to range / moving counter to the trend, I actually stop trading. I don't trade it. I forecasted this move to the downside, yet I still did not trade it because I don't care about trading it, right? So I'm personally right now just waiting for the market to show me the confirmation that it wants to move bullish, and then I will execute on the longs. Now, let me give you a suitcase analogy. I really like this one. I came up with this one like a month ago when I was doing a Q&A that happens every 2 weeks inside of the community. When would you consider taking the risk? You have to pick one. right? So counter trend trading is like reaching into a suitcase with $1,000 in singles, right? $1 bills, and you have to take them one at a time. But it might explode at any second. High risk, small reward. Now, trend trading is like opening that same suitcase, having $10 million there neatly stacked in 100Ks that you can take out one at a time, but that also might explode at any time. But you can take a bundle and leave. Now, in real life, no one would risk their life for a $1,000 suitcase, meaning being able to maybe take $10, $20, $30 to be safe. Yet, in trading, people do this every day. So anything that is counter trend trading, understand, for example, here, on these moves to the downside, yes, did we have moves down? Of course we did. But can you see the differences in size and in expansion between the shorts and the longs? Most people made money when they were going for the $10 million suitcase on the bullish expansion. While the people that are trying to short, yes, it's not just $1,000. It's going to be very volatile, but it's going to be way more risky. So I personally always pick the $10 million suitcase. And as you can see, we have moves down. Eventually, even the $10 million suitcase blows up. That's why you don't want to be there just trying to take everything. You take a little bit and you move away. You take a trade where you believe that during the day the expansion is going to be bullish, and then there you go. You go about your day. That is how I like to approach trading, and that's what has made it feel so easy to make money from the markets, is because I wait for the conditions to be easy. Now, the lie I believed, for years I convinced myself that trading had to be complex. I joined communities where the mentors predicted patterns but never thought about what they were saying. And I can give you the perfect example. So at the time, the first community that I joined, they were trading patterns, right? So for example, an ascending channel. So let's say that they're trading an ascending channel. And they were basically saying, oh, okay, so we are going to go into the third touch. And then, like, we were all the way down here, and the mentor was saying, okay, we're going to the third touch, and then we are going to go to the downside. It was so weird. I was talking to my friends, and I remember this conversation clearly, that I was always baffled of, if we're going for the third touch, why are we not trading towards that third touch? That's what I always found weird. I followed them instead of trusting myself. And for 3 years, I ignored what was really, really obvious to me, which is that direction was everything, because I didn't want to challenge my mentors. I didn't trust myself enough to challenge my mentors and go against them. And the moment I finally tried, everything changed. And since then, I've made close to $1 million from trading, and every dollar goes back to this. Get the direction right, and it becomes so easy that it feels like cheating. Because, and now you might say, well, Kemal, you're always saying this easy, but think about it. If you don't have to be precise, what makes trading hard? Trading is hard because you have to be precise, right? What if you strip that away? What if now you don't have to be precise anymore? What if now you focus on one thing, which is the direction of the market, and then you just execute in line with that direction? And by obsessing over the direction, you will understand that you will overall be more right than you are wrong. While when we are trying to be precise, the probability of us being wrong is actually quite high. Now, this takes us a lot into trading psychology. So the psychology line. The root of trading psychology. This is something that people make seem complex a lot, but again, after 6 years of trading, I've noticed that a lot of these things that people try to make seem complex, they're actually not. So every trader overcomplicates trading psychology. They think it's about meditation, some mindset hack, or some deep internal transformation. I spent thousands of dollars believing in that lie. I bought multiple trading psychology courses where it's like, oh, let me go into the roots of my childhood and blah, blah, blah. And I was still unprofitable. And the truth is that psychology can be brutally simple, because it all boils down to one thing. Emotion equals reality minus expectation. Let me explain what that means. Emotion is going to be the gap between reality and your expectation, not only in trading, but everywhere in life. So let me give you a real life example first. Let's say that a friend of yours says, hey, sorry, I'm going to be 15 minutes late. When he arrives 15 minutes late, you're like, it's fine, I already expected you to be late. Yet if someone says, no, I'm on time, and they keep on saying, no, I'm on time, I'm gonna be there. If they arrive 15 minutes late, you're like, why would you do this? Why didn't you just tell me that you were late? So your expectation, so to say, was that they were going to be on time, yet they were late. So that means that your emotion is going to be tied to how late they were. But if they say that they're going to be late and they are late, then expectation and reality are basically the same, which means that there's little to no emotion. It's never going to be zero, but there's little to no emotion. Every emotion you feel in trading comes down to this equation. For example, when you enter in a trade and you target a 2R, you expect it to be a winner, right? You did your analysis, you forecasted it, you did everything, you executed, so you expect the trade to be a winner. If it becomes a loser, now it doesn't feel like only a loser. It feels like you were also stripped away from the winner. Which means that not only did you lose 1R, but the market also took away the possibility of you making a win. So the reality was -1 and the expectation was +2. So -1 minus +2 equals -3R. That is what your emotion is going to be. You are going to feel as if you were betrayed by the market, because this was going to be the winner. Example, you enter in a trade and you target to the 2R, but you find reasons why the trade can be a loss. So you become more neutral. You understand that the trade can be a loss. So if it's a loss, expectation and reality match. So therefore, the probability of you having strong emotions becomes much, much lower. Now, how can you do this? The mental shift that feels like cheating was that once you understand this formula, psychology stops being complex. Expect every trade to be a loss. The fastest way to reduce emotions is to assume that every trade is a loser. If you can't accept the loss, don't take the trade. And how do you do it? Before entering, look at all of the reasons why the trade could fail. Obviously, it should have more positives than negatives because, again, it's a trade in line with your plan, but there's always reasons as to why the trade might be a loss. So it should always have more positives than negatives, but understanding the negatives is incredibly important because it makes a loss a possibility in your brain. A lot of what happens is that when we enter in a trade, we don't even think about the possibility of it being a loss. It's like we forecasted it, we executed, it follows the plan. So if it follows the plan, that means it's going to be a winner, or that it should be a winner. And then when it's not, that's when you get the emotions. And I'm going to give you an example of something that happened recently. So right here, this was a trade that I actually took live. We do 2 live trading sessions every week inside of Funded Trading Blueprint. You can sign up with the link in the description. And we had everything that we were looking for. The sweep of liquidity, the market moves to the upside, it closes above, we enter, and the market starts moving to the upside. By the way, we trade on the 1 minute, but we also are very, very profitable on the 5 minute. So I enter right here after a lot of confirmation, and the market starts to move higher, and some people are like, well, I guess this is going to be a win. And I was like, don't try to predict that this is already going to be a win. And then we move all the way down back to break even, sweep the low, and then go back up. We were already running 1R, and I was like, okay, this is looking good, but still it might be a loss. Why? Because look at the 1 hour. I was literally saying this live. Look at the 1 hour. We are still stuck within this range. Overall price action can still easily move to the downside. Did I think that that was going to happen? Not really. And as you can see, the market still ended up going to our target, which was basically this extreme. But I was always forecasting the possibility of the trade being a loser and why that trade could be a loser. So every time that you're looking at your position, find reasons as to why this is going to be a loss. Now you might say, oh, but the law of attraction and blah, blah, blah. Listen, the market doesn't care about us. Like, the market could care less about our trade. And so since no trade has a 100% strike rate, you need to find a reason as to why this trade is going to be a loss. Now, the lies that traders believe. Most traders are emotional because they believe in 3 different lies. Number 1, mindset fixes bad technicals. It doesn't. No psychology course will save you if you don't have a profitable edge. Believe me, I've been there, I've done that. My one thing was that I was not profitable at a time. I wasn't focusing on the right things. Now, number 2, psychology is complex. It isn't. See the formula above. This is literally everything that trading psychology is. 3, hindsight. Thinking if I had done this, I'd be profitable is an illusion. You can't change the past. The only thing you have to do is forecast and execute. I talked recently with one of my students and they were like, hey, how did you fix your fear of executing? And I was like, I just started executing on my forecast, no questions asked, because my forecast is the part of the day where I'm fully unbiased. Whatever happens in the morning, usually I'm very unbiased. And so if I forecast something and that does indeed happen, I know that my neutral brain told me already to execute on it. So I execute, and if it is a loss, it is what it is. We understand that there's multiple reasons as to why the trade can be a loss. So instead of thinking in hindsight, think, how could I have improved my forecast? How could I have improved my management? Never think, if I had done this, then I would be profitable. Now, an important truth: if you forecast something and you don't execute and avoid a loss, that's a bigger loss than forecasting, executing, and taking that loss. Now, I want you to read this again, and I'm going to read it again. Important truth: if you forecast something, don't execute, and avoid a loss, that's a bigger loss. Not taking the loss is a bigger loss than executing on that trade and it being a loss. Why? Because now we've talked about two scenarios. One, where you forecast something, you don't execute, and you avoid a loss. But what have you told yourself here? You've told yourself, I don't trust my analysis enough to execute on it, right? Oh my God, I avoided a loss. You're just reinforcing not trusting your forecasts. That is the worst thing that you can do, because the one thing that is going to make you profitable over the long term is your forecast and your processes. We'll talk about this very soon. Now, why does this feel like cheating? Well, everyone is trying to find a reason in their childhood that is making them unprofitable, just like I was doing. You're just focusing on the direction of the market and you're consistently profiting. It's about having a profitable edge and executing over time. Right? By forecasting, executing, doing the process of a profitable trader, you will become profitable. It's not this childhood thing that is making you unprofitable. Now, the belief prison, the lies we tell ourselves. Traders love to believe that words alone will change their reality. They repeat affirmations. They tell themselves, I am a profitable trader, I am a profitable trader, I am a profitable trader. But saying it doesn't make it true. Doing what a profitable trader does is what makes you profitable. This is what I was talking about before. Now, what a profitable trader actually does: they forecast every day. They execute on their forecast and they manage their risk. If your beliefs don't translate into action, they're just words. So I can say I am a Formula One driver. I can say that 10 million, billion, trillion times. It's not going to make it real. What is going to make it real is me going to the track and actually trying. And even then, the probability is very low. Which, side note, trading is the best thing that has ever happened. Like, none of us that are watching, unless you're Lewis Hamilton, which if you are, I'd love to see a comment. Or Verstappen, I don't know, some Formula One driver. Just comment, I guess. But none of us that are watching this are ever going to become Formula One drivers. Because you need to be a multi-millionaire, like generational millionaire. And you should have started at 15 and then still be one of the best. The probability of that happening is very low. While in trading, you just need some money and you can profit. And we'll talk about that very soon. Your one thing is doing what a profitable trader does. Now, the illusion of specialness. Traders also believe that people they look up to are special, that we have hidden talents, psychology, mathematics, or more. I can tell you right now, I've met almost every trader you idolize, and none of them are special. Professionals, retail, I've met a lot of them. None of them are special. They simply focus on the right things and ignore everything else. That's literally what they do. The lie that holds you back, believing that others are special, is how you justify you staying stuck. You think they have something I don't. Nope, that is not true. It is not true. I don't have something that you don't have. I'm good at math, but even then, I'm like good at 5th grade math. You tell me, I don't know, what is 7 times 7, and I will say 47 million, right? I'm good at mental maths, but still, I'm not a genius, right? You don't have to be a genius. That is the beauty of trading. Like, just The most normal people can become profitable traders. You don't need anything special. Usually, by the way, the smartest people are the ones that have the lowest probability of becoming profitable because they start overthinking these things and oh, no, there's this other thing that definitely is affecting this, and then there's my childhood, and then there's this. The more I dumbed down my trading I just look for direction, and when I have the direction right, I execute. I forecast and I execute. That's my trading now, right? So my own prison. When I started trading, I fell into this trap too. After one loss, I filled 2 pages of my notebook saying, I persist until I succeed. I thought that if I believed hard enough, it could change my results or even make me less emotional. I'm not joking. Like, I did this during my job even. But nothing changed, and not because of lack of action, because I was working every single day. Every single day I was trying to learn to trade. It wasn't the lack of action. It was the lack of the right action. You can say you want to become a world-class football player, but if you don't even step on the field, you'll never become world-class. The same thing is with trading. You have to be on the field. You have to be forecasting. You have to be training. You have to do every single thing that a profitable trader does to actually get there. Now, why do beliefs feel so powerful? Beliefs are dangerous because they create the self-fulfilling prophecies. If you believe that you will blow every account, you'll always doubt yourself when taking a trade. If you believe that you can't trust your own analysis, you will never execute on your forecast. If you believe that trading psychology is a problem, you stay stuck forever. It's not about the right beliefs, but asking the right questions. You can ask a profitable trader how to grow tomatoes. Even if he gives you the right answer, it doesn't mean that that is really what you needed. So the reason I'm making this video is because I want to simplify everything. So even this, I want this to become your new belief of like direction is everything. I'm telling you, I will stand by this for the rest of my trading, or that trading psychology is not that complex. I want that to become your belief because I know that by you believing that, the probability of you becoming profitable is so incredibly higher. If you believe trading psychology is a problem, you will stay stuck forever. It feels like you're lying to yourself at first, yes, but keeping that belief of I am a profitable trader helped me immensely through tough times, right? I'm not saying that affirmations is something that is bad or that it doesn't work. I do that a lot. I still do that to this day. I did that for years and years and years and years. And even though you might not believe it, it helped me so much through the tough times because you just lie to yourself until you believe it. Like, I did that a lot, and you can see it even in it's funny because you can see that even on YouTube, where I've never lied, but what I used to say, I always chose my words very, very carefully. So every time that someone, while I was unprofitable and I was documenting my journey, people were asking me, hey, are you already profitable? And I used to say, not yet. I never said no. I always said not yet. Or I would flip it around. It's like, it depends on what you mean with profitable. Because I already do every single day what a profitable trader does. So it means that it's just a matter of time. But in terms of results, no, I am not profitable yet. I always chose my words very, very carefully. And that's because I was always like doing this trick to my brain of like, yes, you're not profitable. That's fine. Just give it enough time and it's going to work out. So do the affirmations, do whatever you think is going to get you closer spiritually, or anything that you believe increase the probability of you becoming profitable. But also focus on the right actions, because over time, the actions create the results. Now, I want to finish off with the part of making so much money and making easy money with trading. And that comes down to risk engine. So the real game of risk. Most traders think that risk management just means percentages. Risk 1% per trade, 2% per trade. But that's not really what matters. In prop trading, risk is about money management and payouts. If you can take a payout, take the payout. If you're trading multiple accounts, trade one at a time. Stack your payouts. Someone that gets 10K a month is worse off than someone that makes 3K a week. And let's even say that someone that takes a 10K payout for once a month is going to be worse off than someone that makes 9K a month but over 4 payouts. The reason why is because the person that makes 9K a month has way less stress because they're incurring way less risk. Now, what is the biggest mistake that traders make? Most traders don't even understand the game that they're playing, and that is a very, very big mistake. Challenges don't matter. Only payouts do. That's the game. If you don't understand that, you'll never be able to take full advantage of the opportunity. Challenges don't matter. Only payouts do. That's literally the game. It's money in, money out. I'll talk about it very, very soon. If you don't understand that, you'll never be able to take full advantage of the prop firm revolution that I will talk about very, very soon. And risk, I've done both. I've traded many accounts at the same time. I was stressed 24/7, watching every move and trying to squeeze every last drop. And yes, I had big wins. My biggest payout was $35,000, and I've gotten multiple $10,000, $20,000, $30,000 payouts. But the stress was, not joking, unbearable. Before in my videos, people would always be like, hey, why do you have such bags under your eyes? Or like, why did you always have like dark spots in your eyes? It was because like everything was so much more stressful. And I couldn't stop staring at my trades. Now I risk a little less. I focus on one account, 2 accounts maybe. And then the result, I make amazing, consistent money with no stress. And I'm almost making as much as before of those $35,000 payouts. Now, there's always a balance between playing it safe and making money, because after 6 years of trading, I can tell you that there's 100% a balance to be had between making money and gambling. You don't need to make tens of thousands of dollars in payouts all the time. If you're able to get an extra 10K a month from trading, that would already be amazing, and it doesn't require a lot of risk. And now I want to finish off with the prop firm revolution, which literally has changed trading forever, especially retail trading. So the capital question that disappeared. When I first started trading, every beginner, including myself, would ask the mentor the same questions. How can I get capital? That was the frustration of every trader, because without at least $100,000 in your personal trading account, how would you ever live off of trading? But today, none of us are asking that question anymore. And why? Because prop firms exist. Now, the leverage opportunity. I started with a $1,000 personal account. That was all I had at the time. And then I thought that if I ever get 100K in investor capital, my life would change. It wouldn't, because investor capital is trash. Like you get like 20% profit split. So let's say you make 5% in a month on a 100K investor account, you get $1,000. Think about that. Now for just $80, you can access a $50,000 account. With code Kimmel on Funding Ticks, it's going to be $80. CFD is going to be a little bit more, but that kind of opportunity did not exist 10 years ago. For $80, let's say you get a $1,000 payout. That's a 12 times return on your money. Even if you lose 2 challenges and pass one, that's $240 that you spend for $1,000 out. You just 4x'd your money. Where else in the world does that exist legally? Basically nowhere. So prop firms have made capital the least of our problems. Skill is the only bottleneck right now. The money in and money out principle. What I've said above is incredibly important. You need to think about prop firms as money in, money out, because that's the game that they're playing too. How much money is coming in? How much do we have to pay out? That's literally what prop firms think. So you have to flip it around for yourself. Most traders don't realize how insane this leverage is because they're so focused on passing the challenge. Passing isn't the point. Payouts are the point. But obviously, you need to become profitable before you ever apply this sort of principles, right? Those are the principles that we talk about inside of Funded Trading Blueprint. Now, the Blueprint protocol, this is the framework that my community follows to win the prop firm game. 1. Education first. This speaks for itself. That's why they're inside of Funded Trading Blueprint. This is real money. Stop gambling on challenges just because the upside is amazing. Don't forget that prop firms make money when you lose. So stop being the sucker in the liquidity for profitable traders. Learn to play the game properly. Rotate the accounts. Withdraw every time you can and stack your payouts. Take a payout before buying the next account. Stop thinking about scaling before you don't have proof of concept. Many traders ask me, should I scale up? And my literally first question is, how many payouts have you received? Because if you haven't received any payouts, you shouldn't be going for a 200K account unless you have a lot of money. So I started with a 1K account. And today, traders complain that prop firms make money when you lose. Guess what? Brokers too. This is trading. It's a zero-sum game, but prop firms literally changed the game forever. I remember failing my first $200,000 account that I tried passing. That was 1,000 euros, $1,000 that I paid for it. And in the second one, having a $20,000 payout, which means I 10x'd my money. So I've seen students put less than $500 in and get a $7,500 payout. And that wasn't possible before prop firms. Now, why do prop firms feel like cheating? Think about it. For less than $100, you can access tens of thousands of dollars. And once you get the first payout, which hopefully covers the expenses you had to get the account, there's literally no more risk on your side. It's as close to cheating the system as possible. Prop firms didn't make trading easier. They made it accessible, and that changed everything. Now, they didn't make trading easier. They made the probability of you making money trading way higher. That's very different. So first, you need to understand how to make money consistently from trading. You need the blueprint to get funded. Now, prop firms are here to stay, and if you learn the game and play it properly, payouts become inevitable. For the first time in history, you don't need to be rich to trade. You don't even need investor capital. You're only limited by your skill. Now, the cheat code. Why does this feel like cheating? If you've been listening, you probably feel like this is too easy. Master the directions, simplify psychology, break limiting beliefs, lock in your payouts. That's literally the whole game. And that's exactly why it feels like cheating. Because it's so simple. Because everyone is still complicating it. Everyone is still finding the reason why their trading psychology is making them unprofitable. They are just focusing on the wrong thing. I can tell you that for a fact. But let's be clear. This only feels easy after you learned how to do it properly. Now, why is this the best time in history to become a profitable trader? Making money with trading has never been easier. You don't need investor capital anymore. You don't need to work at a bank or hedge fund. And with $5,000, you can make tens of thousands of dollars. Obviously, this is never a guarantee. 99% of traders lose. But maybe through this video, you were able to understand how to increase the probability of you winning. Prop firms have created an opportunity that traders 10 years ago would have killed for. Every trader has a choice. You can keep believing trading is too hard, too risky, too complicated, or you can accept the truth that with the right education, trading becomes a system. Education is key. Prop firms are the opportunity, and together they make trading the closest thing to a cheat code that you will ever find. So I hope you enjoyed this video. If you want to become a profitable trader this year, then check the second link in the description. And if you want to check out the best futures prop firm, Funding Ticks has you covered. With code Kimmel, you get up to 80% off.